What's going on out there? Welcome back. It has been a long time, YouTube people. It's been a long time. I've been on a hiatus. Not from investing and trading, but just a hiatus from doing YouTube. So, welcome back. And I have some good info for y'all today. And as always, I never want to encourage you to do anything. You do your own research, make your own decisions, but I just simply want to share some ideas with you that you may want to take note of. All right, so let's go over the concept of day trading and some reasons why you want to be careful when you consider day trading. And I have dabbled with day trading off and on. I have day traded shares of stocks. I've also day traded options. I've had quite a bit of experience trading both, and I've made some money and I've also lost money. I'm very transparent, and I'll be honest. I probably a little bit in the negative on day trading. So it's a very unstable way to invest or trade the markets. So let's look over some information here. And this video won't be long. I just kind of want to share this with you. Day trading statistics reveal a challenging landscape with high failure rates and long-term success rates. While some traders find success, the vast majority lose money and many quit within a short period. Statistics highlight the importance of risk management, as poor risk management is a primary factor in day trading failures. And it goes a little farther. High failure rates. A significant percentage of day traders lose money, with one study reporting that 72% of day traders ended the year with financial losses. Here's a big one: low profitability. Only a small fraction of day traders are consistently profitable. Some sources estimate that only 1 to 20% of day traders make money. And 20% is pretty high, but it's somewhere in that category. With even fewer making a consistent living from it. Short lifespan. And it's not talking about your lifespan. It's talking about your trading lifespan. Many day traders quit within a short period, with some estimates showing that 40% leave within a month and only 13% remain after 3 years. Importance of risk management. Poor risk management is a primary reason for day trading failures. One source notes that over 85% of active day traders fail in their first year due to poor risk. Underperformance, and let's go with profit-loss ratio. Many successful traders aim for a profit-loss ratio of at least 2 to 1. That means they seek to gain twice as much as they make on a trade. Now, there are many people, especially with the advances in technology we've seen over the last 15, 20 years, many people look at day trading as a side hustle. While some day traders aim to make a living, many see it as a way to supplement their full-time incomes. I'll let y'all, if you want to pause and look over day trading volume, you can. I'm just kind of pointing out some important stuff here. The optimal trading times. Most people that have experience with this will trade from 9:30 to 10:30 a.m. That's New York time. If you're Central, it's 8:30 to 10:30. West Coast, I believe it's gonna be 6:30 to 7:30 a.m. Now, here's a big one. Here's an important one: the rule of 90s. This rule suggests that 90% of new traders lose 90% of their starting capital within 90 days of their first trade. Let me repeat that, y'all. 90% of new traders lose 90% of their starting capital within 90 days of their first trade. Now, this is just my opinion, right? I'm going to share my opinion with y'all on day trading. It is, for the most part, you're gambling. If you're day trading, you're gambling. It's not much different than placing money on the New York Knicks to beat the LA Lakers or whatever teams you follow. You're gambling. You don't know what the market is going to do in a short period of time, because guess what? The market will normally take the scenic route. And if you don't know what that is, it's gonna, if the market is in an upward trajectory, what's gonna happen is it may dip and go down while it's on the way up, just to throw you off, just to hit your stop losses. Yes, I said it. There are games that are being played in order to take your money. If you are inexperienced, even if you're experienced at day trading, there are games that the market makers will play to take your money, because they know you are emotional over your hard-earned money. And they, more than anything, they want to extract it from your pockets and put it in their pockets. That is their goal. That is their aim. So you have to be more disciplined in your approach, especially when you're in the learning phase or the learning process. Now, what you're looking at here is the S&P 500. Now, this is of course, the broad, this is basically the top 500 companies in the market. And if you look at over the past year, let's move out to 1 year. The market is up roughly 10. And that's right on point with its average. It normally goes up 10% on average per year. Now, if you go back a couple of months to February, it was actually up 16% on the year over the past year. But of course, when 47 started bringing up tariff talks and implementing, his strategies on that, I'm not getting into politics, but y'all know what's going on with that. It took a major nosedive. And if you're positive like I am, you look at that as an opportunity. See, this right here is a buying opportunity. Now, of course, if you have a 401k, you could have taken a major hit with that. But as long as you are looking down the road and you're investing, the market is going to come back up. The market always rebounds and comes back up. So it's not anything to worry about or fret. You don't want to get too overly emotional over these things. You just want to keep buying and averaging into your positions. And the things that I'm going to show you guys in the videos that I'm going to be presenting to you, I'll be talking about long-term investing and swing trading. Those are the two things I'm doing going forward. Now, will I never take a day trade? I'm not going to say I will never day trade, because sometimes it happens accidentally. I may get into a position and something happens, it shoots up real quick, and I may want to take that profit right then. And that could happen all in one day, but it's not something that I set out to do anymore. My days of looking at day trading as an income source is over. That's not me anymore. Day trading the market will stress you out. It could make you sick. If you do it every day and you're constantly looking at your phone or your laptop, it could make you sick. So, in closing, I want you guys to really think about this. If you have, been really stressed out and you've been trading and it's just up and down, you really want to think about your future and think about, time goes by quick. And so we have to get out of this microwave mentality of, I got to make a come up overnight. I got to get rich by next month, because that more than likely ain't going to happen. All right. So stay tuned. Hope y'all have a great rest of the weekend. I'm out.